Fabulous. Can I get a wave if everybody can see my screen? Is that okay? Yep, perfect. Alrighty. So thanks, first of all, thank you so much for joining us today. This is our very first episode of our new webinar series. I can see by the list of attendees that we've got many of our existing partners who have signed in and are joining us today, but there are a few new faces as well, so that's really exciting. We so appreciate you giving your time on a Wednesday afternoon to come and chat with us. We'll probably be about 30, 40 minutes just unpacking loan options for SME clients. Most of you on the call, or those who are joining now, are very familiar with Amfin and what we do. However, for anybody who doesn't, we work alongside brokers, accountants, and financial planners to help you solve your clients' problems with tailored finance solutions in the asset and the cash funding space. This webinar series has very much been a passion project of our relationship management team, and we wanted to create a webinar series to ensure that we're providing the very best support for you as our referral partners. In the series, we'll be covering different content, so you can dip in and out depending on what's relevant to you. Although this episode will be much more of an overview, our up and coming webinars will be, covering content on self-employed clients. We'll be talking tactical about how to beat the dealer and why asset sourcing is your best friend in this current market, just to name a few. All of our relationship managers, including Alex, Phoebe, and Maya, are on the call. We are also joined by our head of growth, Tess, and our head of marketing, Beck, as well. So for those who are not familiar with Teams, we do have our chat function down the bottom, and our team will be keeping across that. So if you do have questions as we go, just feel free to write them in there and we will tackle them either on the call or we can dive into it afterwards. You will also notice at the top of your screen, there is a little button that says reactions. So as I ask questions through the webinar, I would love if you could either raise the hand or put the thumbs up, just to give us a little bit of interaction there as well. Cool. So let's dive in. Today, we will be talking through some really easy questions on how defining business needs and untapping the potential in SME lending. I will be walking you through the different types of assets that are easily funded, as well as the different structures of asset financing. In addition, we will be talking specifically about cash funding. We'll talk to which of your commercial clients would suit this best, and then we'll also run through the structures and how to obtain cash funding as well. From there, we'll then look at what next steps are and how Amfin can help before opening up and having a bit more of a general conversation about any questions or specifics that you want to run through. So we will dive straight in. Before we go into the detail, you might be wondering why we think focusing on SME lending is great for your business growth. Well, client retention is key, right? By focusing on your bread and butter and leaning on a referral partner when it comes to the leads that you aren't currently placing in-house, this is a really fantastic way of becoming that one-stop shop for your clients, to put a ring around them and to really become their trusted advisor when it comes to finance, all of their finance needs, whether that be personal or for business. The second reason is client growth. Your clients become more valuable to you over time. As they grow with their businesses in the life cycle and life stages, by offering all types of finance, you will be able to grow with them. And thirdly, cash flow, it's the biggie for all businesses, right? Including your own. And SME lending can settle much quicker, and the commission payments can be more regular than other financial deals and invoice payments. So if you think about it like this, not only are you servicing your client more holistically, you actually, by branching into SME lending, you'll be allowing that steady flow of additional income to start ticking over within your business. And finally, which does lead me into my fourth point, who doesn't want to grow their business? Offering SME lending on top of what you're already doing will automatically increase your growth and give you the diversity in your main source of income. Okay, I promised you there would be questions. My first one is, who currently is looking after their clients' commercial needs? if you can click the little reaction, I have Alex on standby who's going to do a quick count for me and tell me roughly how many of you are currently doing it. Got a few?
Yeah, there seems to be a few there.
Awesome. Good to see, good to see. So, did you know that over 40% of Australian small business capital expenditure is on equipment financing and leasing? In addition to this, over 62% of SMEs struggle to find funding that actually suits them best. So, if you're not already leading into commercial, we see this as a fantastic opportunity for us to work together so we can help you be more proactive in this space because the need for financing in SMEs is so high. So we've put together 5 key questions that we ask when we're working with our SME clients to better understand them and how we can present the finance solutions to them. So the first one is looking at their business goals for the year. If they're expanding, what does that look like? Is it property, cash, assets, business acquisition, another franchise, a new truck? All of these are things that we can help with. Assets are, of course, the easy and the simple stuff. But a lot of businesses don't know that if a client is looking to expand their business, they can actually secure lending against a future contract, which will help them with those hefty startup costs or initial outlays. So we really do encourage you as their broker to get to know your client's goals and then lean on us so we can help you find the best option to suit them. The second question, which you can ask your clients around, is what are the biggest challenges their business is facing? It could be stock shortages, it could be delays in imports. Often clients focus on their immediate needs and aren't always as forthcoming with challenges that they're facing. I know that we all pride ourselves on being there for our clients, and solving challenges can be a super pivotal part about building those trusting relationships. Now, often when we're reviewing a client's bank statements or financials, more often than not, we see the struggles that small businesses are going through when it comes to consistency around cash flow. The good news here is we have so many finance solutions that we can help with cash flow, whether that be a line of credit or invoice financing. So by opening up the dialogue with your clients around these challenges, you'll be in a much better position to make suggestions of how we can secure solutions for them. And by doing this, you're not actually only just helping them with their short-term challenges, you're also helping them clean up their statements for having a better looking profile so that later down the track, when they're looking to acquire larger funding, they're in a much better spot. Now, this fourth question is a bit interesting, as it'll allow you to get to know your clients in a new way. Can you imagine what your client would say if you said to them, if you had an injection of $50,000 into your business tomorrow, what would you do with it? What would that mean for your business? It's surprising most people actually have an answer to this. But what your clients may not realize is that you can actually help them achieve it. The fifth and final question we encourage you to ask is, what are your client's accountant and financial planner currently telling them to invest in this year? Because it is, as we know, best to align with those plans and really be part of the bigger picture. So I'm sure none of those questions came as a surprise, but we are conscious that they don't always come up organically in conversations. As we've said, it's very common for clients to come to you as their broker for a very specific need and not necessarily having the bigger picture in mind. So when you're sitting here thinking about your current client base, have a think about those clients who are self-employed. Of them, who's currently not using you and not leaning on you for their commercial borrowing needs? If there are any, we encourage you to take a look at these questions and have those broader conversations and just see what happens. So moving into asset finance. When it comes to asset finance, most people assume cars, and that's because it is the most common business expense. However, the best way to think of SME lending is anything with a serial number. If it has a serial number, we can find a home for it. even if without a serial number, we can make it work if the business use is right though. For example, we had a distribution company recently who needed to outlay a large amount of money to purchase wooden transport crates. And as you can appreciate, wooden transport crates don't often have a serial number. But we were able to work with the lender and the client to create a numerical tracking system for those transport crates. So it was easy for the lender to identify the location at any given time, and it would enable them to recoup those assets if it was necessary. So, as we said, cars, trucks, vans generally come to mind first when you're thinking of commercial asset loans. Although there are so many more loan options available to SMEs, like office fit outs or tech equipment. There are also many options for specialized equipment like medical, manufacturing, printing, agriculture, mining, and so many more. In addition to this, as a business scales, loans for modifications have been so popular. So we suggest you talking to your client about, thinking about add-ons for transport vehicles like trailers or attachment units for utes and vans. All right, we're going to check in here. Based on the number of reactions we saw come through just before, I would really love to know, of those who are currently helping their clients, are there any specific questions around assets that we can help with at Amfin that you want to ask now? Feel free to use the chat. I'll give you a minute to type it because I'm very well aware when people are watching you type, it's sometimes a little bit slower, so take your time. Peeps, has anything come through our chat there?
Nothing yet. Don't be shy, guys. We'd love to hear any questions as they come up, even if it's not specifically related to the question Holly's posed. Anything that you've got on your mind, please put in the chat.
Yeah, absolutely. Well, even if you don't do it now, we can definitely tackle it at the end. So as we go, put them in. So now that we've spoken about the different assets that we can look after in that space, another service I want to bring to your attention is, if you're looking after your client's asset finance needs right now, it's imperative that you consider asset sourcing as a non-negotiable extension of that workflow. This protects your client's interest to ensure they're getting the very best deal overall when they're looking to acquire a new vehicle, particularly. With asset delays of 12 months or more not going anywhere anytime soon, it's important to consider the entire experience for your client. Because let's face it, finding a vehicle at the moment, very stressful. And by leaning on a sourcing partner, we are here to do all the heavy lifting for you and for your client. Our sourcing team have access to over 500 dealerships nationwide. And we often say where there's a will, there's a way. And because of that, we have had many scenarios recently where we've actually been able to reduce the wait times for some of our clients, or in some really lucky occasions, find the vehicle instantly in a different state or a different city to that client where they're currently resonating. So it's not just beneficial for your commercial clients who are looking at, expanding their fleet of cars. This service is not only helpful and valuable, but it's valuable to all of your clients, no matter if it's the director looking for his personal car or if it's a business looking to acquire their 10th car. And if any of your clients are looking to purchase a new vehicle, the beauty of this service is it's free for them. So, off the back of why an asset sourcing partner or team like ours should be your new best friend, here's a really great example of how we've recently looked after the vehicle financing and sourcing for one of our clients. So this client in particular, they were originally purchasing a Mazda CX-30 through a dealership, and we were just looking after the finance for them. When it came to settlement, the dealer actually withdrew the car, even though that client had paid a deposit. So as you can appreciate, pretty horrible experience for them. Once our sourcing team was engaged, within 3 days, we were able to source the exact same car for them, settle the finance, and that client was able to drive away with their vehicle, which was just an incredible result after a really stressful week that was. Now, here's another recent example of how we've been able to help one of our SME clients within the mining industry. I've chosen this one specifically to show you all a little bit of range of what we can do. Of course, financing cars is easy, but this was a $330,000 drill rig, so definitely not your normal asset to fund. To add to the complexity of the deal, the asset was both old and being purchased through a private sale. So, as most of us know, that typically means the deal is slightly harder to place due to lender risk appetites. However, based on our strength and variety within our lender panel, we were able to find a home for this deal and have it approved within 3 days. The client was thrilled, and we were obviously able to manage a smooth settlement process after this. Now we've been through the asset types, we will just do a bit of a recap on structures of funding for you. There are several ways to finance an asset, and the variation really does depend on whether the client wants to own the asset at the end of term or on who owns the asset during the term. The first way is secured loans, formerly known as chattel mortgage. When it comes to car and equipment finance, a secured loan is the most widely used option among business owners and operators. And I'm sure I'm not wrong by saying everybody on this call has probably come across a secured loan in some way, shape, or form. So, as we know, an asset is held as security against a loan until it has been paid off. This means the rates are generally a lot more competitive as the risk is lower for the lender due to the security being taken. Secured loans are probably the closest loan structure to a traditional mortgage, which means a lot of your clients should have a lot of comfortability around taking it on. Generally speaking, it's a 2 to 5 year loan term, and it has a consistent repayment structure, normally with fixed rates, and you have the option to include different deposit and balloon structures as well. The second one, by comparison, if you've heard of commercial hire purchase previously, can I get a thumbs up? What do we think, Alex? Is there some thumbs there? Yes, no?
Even getting thumbs on the video feeds, Holly. We've got a few coming up. Plenty of them.
You're on mute, Betsy.
Oh no! One job, mate. One job.
I had one job. Plenty of thumbs coming up.
Great. So, as we know, it is a flexible and affordable way to finance a new asset for business needs. A commercial hire purchase involves the lender agreeing to purchase an asset, usually a vehicle, on behalf of the borrower, and then hiring it back to the borrower over a set period of time. So the key difference to a secured loan is the borrower does not legally own the asset. However, they have full use of it for the term of the contract. The borrower would still make monthly repayments or installments towards the purchase of that asset. And then at the end of term, when the total price of the vehicle, including the interest charges, have been paid in full, then the borrower becomes the legal owner of that asset. Make sense? Awesome. The third structure I want to talk us through is finance leasing. A finance lease is used to acquire an asset for the most part of that asset's useful life. Okay. This type of loan allows a borrower to have use and benefit of the asset, whilst the lender retains ownership of the asset until the end of the lease term. Then when securing a finance lease, the goods often are financed ex GST, and there's often a balloon at the end of term, which can make it much more affordable. Then, once the term is finished, the lessee can obtain ownership of the asset or the equipment upon a successful offer to buy. And traditionally speaking, the offer is the balloon amount. Okay, so the final structure I want to chat through is called an operating lease. This is an agreement where a lender agrees to rent equipment to a business for use over a specific period of time. When the lease term ends, the equipment is returned to the lender and the business is left with no liability of the residual value or with any further obligation. The key difference between the last three structures I've mentioned and this one is ownership of the asset is not gained by the borrower. An operating lease arrangement can be suitable for businesses who need to regularly update assets that quickly become obsolete or depreciate in value, such as your computers, printers, IT equipment, right? This lease can also be common when the cost of removing the asset, or if it's too hard to dispose of at the end of term. So an example of this would be your heavy medical equipment, for example. Okay, so that covers off asset types and structures. Do we have any questions before we crack on? Anyone?
Again,
guys-
no questions from the
No
audience,
questions.
Holly.
Oh, well, it sounds like I'm doing a really good job though. Hey, okay.
We
Keep
had
the
quite
chat
a bit
going,
of
though.
we had quite a bit of chat in the chat, Holly, which I know you can't see, just around sourcing, which is
Ah.
good. So perhaps we can come back to that
Yeah.
at the end.
Absolutely, we'll definitely come back to sourcing because that is a very hot topic and something that has been absolutely, smashing it at the minute, just as far as helping those clients and really making sure those experiences have been smooth. So we can definitely circle back at the end because I think it's really valuable to get that content out there. Okay, so cash funding, here we are. Before we look at loan types, I do want to give you guys a little bit of food for thought. Okay, and I want to dig into why SME clients might need cash funding solutions. Okay, so firstly, a client may be looking to start up a new venture or potentially purchasing a business. In these kinds of instances, they will need a mixture of asset and cash finance. And the key takeaway is there are a variety of options that we can assist your clients with. Secondly, growth plans. This can be investing in staff, marketing, or a whole new franchise purchase, which generally requires capital to be outlaid before a return is seen. Thirdly, definitely want to call out here, when it comes to older assets, they often cannot be financed through asset finance. However, or if they can, the rates are extremely high. So sometimes it makes a lot more sense for businesses to use an unsecured cash loan rather than going down the path of asset finance. Finally, the biggie. Cash flow is probably the most common reason SMEs will require financing because, as we've said, SMEs do quite often suffer from B2B invoices being paid late, but they still have to keep their businesses going in the meantime, right? Cool. So I want to chat through the other options available to help SMEs with business operations and expansions. Okay, unsecured business loans. These are a common type of loan which can be used, as I said, for either cash payments or funding of an asset. The key difference is that the loan is not secured against the asset. It is based on serviceability and the existing cash flow of the business. These are traditional loan types which have repayments made regularly over a specific period of time. Lines of credit. Also a unsecured loan, although it's available to clients on a recurring basis, and they only pay interest as they draw down on that line of credit itself. This acts as a payment facility, waiting for the client to use as required. This can be used by the client that are having challenges with variations of income, like we were saying before, if invoices are being paid late, or for those risk-adverse clients who really want to have that payment facility available for either emergencies or opportunities. Once a client pays back the loan, they can redraw at their leisure to the total value of the line of credit over time. So it does become super powerful for them as they go. Now, sale and leaseback. This has been something that we have seen so much of in recent months for many different reasons. But this is a facility that's designed for commercial clients who want to purchase their assets upfront using their own capital, but then be reimbursed afterwards. Companies may want to make a quick purchase so they don't miss out on any potential opportunities that could be lost on the spot. And by having the ability to purchase now and be reimbursed later is a fantastic tool for a company to have up their sleeve. The fourth loan type is cash flow lending, otherwise known as invoice or debitor financing. Cash flow lending is perfect for industries where they need to make significant outlays before a final payment is received, or when there's delays in invoice payments. This product allows a client to lend off the back of invoices from their commercial clients that they're waiting to receive payment on, and there's generally a 90-day window there. And finally, I want to run you through trade loans. Trade loans and trade finance is similar to a line of credit, specifically to pay suppliers. Businesses would use this facility as required and only pay interest on the funds that are being used. When importing inventory or equipment from overseas, for example, a trade loan is a fantastic stopgap or interim solution for funding those assets which have not yet arrived in the country. Although the business is required to pay for them upfront before they arrive. Once onshore, a business can look to either take out a lease or a secured loan as necessary. A question for you all. How familiar were we with all of these different loan types before we jump into a success story? Was it all pretty, we all knew what was going on there? Yes?
Got a few
Great.
nodding faces there, Holly. A few thumbs up.
Love it. That's what I like to hear. Okay, this is a really, really fantastic success story that we've had, and it's where we helped a client through unsecured lending. This client, to give you long story short, this client was in the midst of a road development into a quarry. Completing the road was vital for the business operations and getting that quarry up and running. In order to complete it, they needed an additional $250,000. They were willing to wear the cost of the interest for that additional loan, and they saw that as a very small expense in the grand scheme of their operation of getting that quarry to completion. So naturally, the client initially went to their bank where they held all their other finances. Unfortunately, after 3 weeks, they still hadn't heard anything back. It was still sitting at pending, which understandably left the client feeling a little bit agitated. So once we received the referral, we were able to secure an approval within 3 days. This meant some serious peace of mind for the client, and we were able to settle it really quickly after that. So you've probably heard enough of my voice. Won't hold it against you. And I hope you have learned something about the different loan options available. But what's next? Of course, our existing partners who are on the call, if you do want to get in contact with any of your relationship managers to talk about a scenario off the back of this webinar, please do. Call, text, email. We're here for you. If you're new to Amfin and you're getting a bit excited about how to grow your business, you can get onboarded and accredited with Amfin very, very easily. On the next slide, I will display our full team of relationship managers. You'll see our lovely faces, our email addresses, and our phone numbers. I do encourage you to reach out because we are absolutely here to help. Today, if you've loved today's content and you saw value in it, we really encourage you to follow on with our monthly webinars moving forward. Although today was very much an overview on loan options for SMEs, as I mentioned at the start, our next webinar will actually be more technical, and it'll give you a lot of very, very hands-on ways that you can beat the dealer, specifically in asset finance in both consumer and commercial. All right. Now, we did say questions. I'm more than happy to take them. If there's anything anybody would like to ask, you're more than welcome to direct it at any of us. We've got, as I said, myself, Alex, who looks after Vic, SA, and Tas. We have Phoebe, who looks after New South Wales and the ACT. And then we have our fabulous new starter who's just joined our relationship management team, Maya, and she is looking after WA. She's Perth-based as well, so that's awesome. Any questions? Throwing it out there, guys.
We do have some specific questions taking place in the chat at the moment, which Tessa is responding to, just with regards to commissions. But Holly, Narendra is one of the brokers up in Queensland, so it might be worth you circling back with her afterwards, just to go through those answers.
Yeah, so if you're doing a tick and flick, Narendra, the commissions are all the same for you. It's a 35% split.
Perfect.
That's right. And if
Good.
there are any specific questions around, getting a more generalized view of, comp splits or products and everything that we can help you with at Amfin, we can definitely break off and have more one-on-one chats so we can do a deep dive into your specific client base and different options of how we can assist you specifically.
Just for everyone that joined us a little bit late as well, we were recording this, so we will be posting it up to our YouTube channel and sharing that link. So should you want to review the presentation, that will definitely be shared around.
There's just one question, Holly, around does the credit history impact unsecured lending?
Yes, it would.
Yeah, so it depends on your policy as well, Narendra. Obviously, some are a little bit tighter than others. So generally, your sharper rates, they're looking for high quality Tier A asset-backed clients. Where you're getting into those 22s plus, that's where you've got a bit more flexibility. Generally, it's that 6 months ABN and GST, but we do have a specific franchise funder as well for day one startups where we can look at asset and cash. Obviously based on the strength of the business they're entering into.
Fantastic.
Awesome.
No worries.
There's lots of thank yous in the chat for you, Hol, on a good session. So well done.
Great. Awesome.
And if anyone else has any other questions, obviously feel free to stay on as well.
Perfect. Fantastic. As I said, we'll be sharing the recording of this afterwards should anyone want to review. Otherwise, a big thank you to Holly for presenting this one, and thank you to everyone for attending. It was a great time, and we look forward to hopefully seeing you on the next one, Vehicle Finance Beat the Dealer, which will be taking place in September on the 6th. So we hope to see you all then.
Thanks
Fabulous.
so much, everyone.
Thanks so much,
Thanks,
everyone.
Holly.
Take care. All righty. Bye.